In this episode, we're going to talk about why you shouldn't take some financial advice from TikTok.
Then we're going to talk about what the Chinese government nationalizing Alibaba and Ant Financial could mean for investors.
It's Monday, January 18th. Happy MLK Day. This is the Piper Rundown. We analyze business and culture to help you win. Today's rundown is presented by JetStore. JetStore has been providing affordable, reliable, and easy-to-manage data storage and cloud solutions to over 4,000 customers worldwide for over 26 years. That's longer than I've been alive. JetStore offers storage systems for private cloud hosting, video surveillance, Internet of Things, AI, machine learning, edge computing, data archiving, HPC, media production, medical imaging, and flight simulations. For more details, visit jetstore.com. Thank you for sponsoring the rundown.
Our first story today is a TikTok that has gone viral in the financial Twitter, financial social media sphere. Lots of professional investors are commentating, saying that this is signs of a bubble, that this is quote unquote bad advice. And we want to show it to you now and then add our 2 cents.
So how do we make money from home? For starters, this is not a sponsored video. We just get this question all the time, and honestly, the answer is really simple.
So basically, I just trade stocks on an app called Robinhood, which I left a link in our bio if you want to check it out. It's free to download, free to sign up. They actually give you a free stock, so they're paying you to sign up. But again, not sponsored. And I know trading sounds intimidating. Here's my strategy in a nutshell. I see a stock going up and I buy it, and I just watch it until it stops going up, and then I sell it, and I do that over and over, and it pays for our whole lifestyle. If you're wondering how much you can make doing this, in this month I turned about 400 into 14,000, and in this month I turned less than 1,000 into 20,000.
And honestly, my favorite part about this isn't even the amount of money you can make, but just the fact that we don't have to go to a 9-to-5 job.
Yeah, we can focus on things that we actually enjoy doing. So if you have friends that want to make money from home, you can tag them or send them a link. Or if you make money this way, share it in the comments so other people know there's more people doing this now.
So there's 2 ways to read something like this. I can start with the charitable interpretation first. What he's basically describing is a well-defined, well-structured method, which is momentum trading.
Sure.
You catch things when they have some momentum in a certain direction, and you get out of the position when that momentum starts to peter out. There are very, very world-class, successful investors that have followed that model, and it is not unfounded to give that perspective. Similarly, that seems so simple and so plain, and a lot of what Wall Street does, and frankly, lots of service providers generally, in order to justify a large fee, in order to justify their cut, they make things that are simple seem significantly more complicated to obfuscate the reality from the client, from the customer, and take more profits for themselves. And similarly, this is a strategy that for a very long time, and I'm listening right now to the biography of the founder of Ameritrade, and he talks about how it used to be the only way to get a trade done was the broker called you, pitched an idea, you had the sale, and then it flipped where you could call the broker and they lowered fees, and we've seen this slow decline of fees over the last 40 plus years until now we're in a Robinhood environment, like he mentions in the video, where there's no fees and it's available on any device. It is highly accessible, and tools like options and puts and calls and information sources like subreddits, like Real Vision, which puts out tons of free content on YouTube, and other associated sources, allow regular Joes and Jills, Jacks and Jills, to make these types of investment for themselves and change their outcomes, their fortunes, that were otherwise exclusively the domain of the uber wealthy.
Yeah.
The flip side of that is that we had a very bumpy, highly volatile 2020, but before 2020, we were more than 10 years into a economic cycle that often has corrections, that has been exacerbated and inflated by enormous amounts of stimulus, enormous amounts of quantitative easing by the Federal Reserve and other central banks around the world. And very similar to the meta pattern that you're seeing here, in the midst, leading up into the dot-com bust, everyone was so smart, everyone was making so much money investing, telling other people to make money, that people were quitting their day jobs and becoming full-time investors because that was the easy, profitable outcome. A lot of those people got completely wiped out, washed out when, and this is the basic issue with the momentum move, is if your whole strategy is to catch upswings. This thing starts to go up, I catch it, I ride it up. If nothing is going up, if the market starts going the other direction, what is your strategy? I'm not saying this person doesn't have a strategy, but by the looks of it, they were probably a teenager the last time there was a severe market correction. So they don't have that hard-earned experience, and they certainly, most likely, were not reliant on their entire livelihood with those investments being successful. So if you don't have anything swinging up to catch on to, how are you going to make your money? Maybe they're saving, maybe they have hedging strategies in place, but you can see how that's a significantly more complex model. And for the folks that are seeing something like that, thinking to themselves, shucks, that looks easy, shucks, that looks attainable, they are not. If that TikTok is the impetus for them to get into the markets, and they always talk about the smart money gets in first, the least informed money gets in last, that sounds to me a lot like the least informed money is getting in last. They will not have the proper hedging strategies in order to protect themselves should market dynamics change. And it worries me simply, it worries me that there are great resources of information out there for people to take in, but because of the cacophony of so many different perspectives, so many different people going like this, including you and me, that there's a lot of people getting bad advice and potentially headed in a very dangerous direction.
One of the reasons why we don't give explicit financial advice on this channel, because you do your own research, you form your own opinion, and you
think for yourself.
Exactly, think for yourself. And that's kind of one of the problems with the viral culture now, and just with the videos that can especially hit on TikTok. A lot of kids now are just completely missing out on the fundamental understanding of the word investment. They look at this, they see the day traders who are putting up these crazy numbers and who actually have the basic understanding of how everything works, and they don't see investment as a long-term thing, like an investment in your life, in your finances, in your savings. They see it as something that is a get-rich-quick type of deal, and it's going to be the downfall for a lot of people.
And to add more complexity to this, we're going to show you two comments here that have been put on our YouTube channel because we are making this, financially focused, financially related type of videos. And this first one, they were asking at the end of our Poshmark analysis, so what was the recommendation? And that was kind of the point, as you said, we want to outline what the bear case is, and we want to outline what the bull case is, and allow you to see both of those visions, because the risk is always if you can only see one, if you can't, and that's, literally down to the Big Short, and some of the great investors that had the perfect short in place to benefit from that significant market downturn. They went and looked eye to eye, face to face with the people on the other side of their trade in order to verify that they had thought through this thoroughly and believed that that person had a flaw or an error in their judgment and that they were on the right side of the trade. So that's why we put both sides to these arguments. You need to be able to see the alternative argument in order to feel secure in whatever position it is you're taking.
To make an informed decision.
And the other one we're going to put up here is someone asking about a very recent video. We talked about Zapier, Descript, Webflow, these different no-code solutions. These are all private companies raising private rounds of financing as their valuation grows. And we were just talking about the interesting technology. We were talking about it more through the lens of, hey, if you are a user, this is a software that can help you build your company, produce your podcast, run your business more efficiently. That was the lens that we were talking through it. But obviously someone is asking, how do I invest in something like this? Because that's all the rage. That's what everyone's aflutter about right now. And it belies a lack of sophistication that they don't understand that when we say a Series B, implicit in that is a private round of financing.
Yep.
When we say that Sequoia bought shares directly from the founders, and we know exactly who transacted, that belies that this is a private company, and that transaction is not occurring in public markets where it is readily accessible to all sorts of investors. And so it's those little cues that you're probably not aware, because you're just watching our videos and you're moving on with your day, and a lot of folks are just a little bit more informed for it. But when we see those type of data points, where those type of questions are happening, and clearly there's an appetite and a movement for those type of investments, it puts it puts us on high alert, and it's important that we are forthright and clear in our position on that type of potential for speculative mania.
Don't believe everything you see on TikTok.
Another thing that people could get confused about is the news that Virgin Orbit has successfully launched small satellites into orbit with their rocket Launcher 1. Now, one of the reasons this is important is we've talked about SPACs in the past.
SPAC.
And one of Chamath Palihapitiya's very first endeavors in SPACing a company was Virgin Galactic, a company that did not have, I believe, any even revenues, let alone profits, but brought them in the public markets. People get excited about space travel. They get excited about the Virgin brand and Richard Branson. And they see a piece of news like this, and they go rush over to Virgin Galactic and say, wow, that's great news. This must be a company on the up and up. Virgin Orbit is not Virgin Galactic. Virgin Galactic is focused on transporting humans up into space. Virgin Orbit is focused on the launch of satellites and other technology assets into orbit so that they can be served for other commercial purposes. Very important to know what you're getting into.
Totally. I don't think I have much to say on that other than like exciting to explore space more. That's pretty wild.
No longer a virgin to orbit.
There you go.
Our third story, another security that many people are woefully under-informed about, Alibaba and its spin-out and financial. Talked about them at length here. We're rehashing somewhat, but there are rumors coming out through the IB Times that the Chinese government is seriously considering nationalizing Alibaba and AntPay. If you don't know what nationalizing means, basically infers that the equity holdings of the company, which had previously been held by investment trusts, private individuals, and other associated parties, indexes like Vanguard and BlackRock and those proxies that they have for the entire market, those would be exchanged for equity holdings by the Chinese government. Now, one of our favorite frameworks, Hannah, is price maker versus price taker. When you're in the midst and the throes of a pandemic and no one is traveling and everyone is heading online, Slack gets to be a price maker. They can take whatever price they want for a debt offering. Airbnb, on the other hand, is a price taker in that they just need the money. And if it's an exorbitant, extortionary interest rate with onerous terms, they have to take it because they need it to survive.
Facts.
If you are a company that 99% of your market share and almost all of the retailers on your platform are based in the country of China, and the one-party authoritarian government, Chinese Communist Party, says, we want to nationalize this company, do you think that Alibaba shareholders will be price makers like Slack or price takers like Airbnb?
Let me think about this. Definitely price takers.
Definitely price takers. And markets seem to agree. On the breaking of this news, Alibaba was down 8%. They have been down 25% since October when Jack Ma made his comments disparaging the regulatory bodies in China. And we have still not seen Jack Ma. To update you on the video that we did, Where is Jack Ma? A source said that he is laying low. You can take that at face value.
I feel so much more secure about that now.
And activist short sellers have been warning us about this. Carson Block, one of the biggest short sellers in the game, has said for a while that Alibaba is uninvestable. Other parties have, including one of the main people behind the China Hustle back in 2018, the documentary that exposed a lot of the fraudulent behavior associated with SPACs for Chinese companies that were, just completely misrepresenting their numbers, has put it to you this way. He cannot say without shadow of a doubt that Alibaba is a fraud and that they are making up false numbers.
Right.
But to counter that, once again, we want to see both sides of the argument.
Yep.
You cannot prove that it is not a fraud.
Exactly.
And that seems, okay, Aaron, what does that mean? You can prove that Amazon is not a fraud.
Yes.
You can go to every single outside company that they have a deal with and collate each number, verify it, and basically indicate that the revenues that Amazon purports to have, the expenses that they purport to have, are more or less on the money, on the nose, and would pass an audit. I'm not saying every single number out of Amazon is perfect. That's not what I'm saying. But you can prove that it is not an outright fraud. You cannot prove that Alibaba is not an outright fraud. And if you were really intent on maintaining the status, maintaining the perception, and obfuscating, never letting out that there was such a flagship, company so tied to being a proxy for Chinese GDP, for Chinese economic activity. If you wanted to protect that from ever being exposed, a great way to do that would be to nationalize the business.
Definitely. Interesting through line of skepticism in this rundown.
A little bit of skepticism here, and a little bit more due to Coty, which is actually being sued by its shareholders for negligence in its acquisition of Kylie Cosmetics. We're going to show some clips here. We talked first about Kylie being the youngest ever self-made billionaire. Kylie Jenner is selling a majority stake in her cosmetics company, Kylie Cosmetics, to Coty. And her 51% stake is being sold on the heels of basically her sales kind of flatlining or maybe taking a slight dip from their precipitous climb over the course of 3 years. Forbes named her the youngest ever self-made billionaire. But this is basically her cashing out, $600 million straight to the bank. She can do whatever she wants with, continue to build her business. And then a few months, I don't know if it was months after, years after, I'm not really sure.
A couple months, I think.
Was exposed that Kylie and her team had misrepresented the numbers, artificially inflated their revenue. And that's a real problem for Coty because we've talked about this in the past. How are executives at publicly traded firms evaluated? How are shareholders trained to value different companies? Earnings per share. How do you increase the earnings per share? By acquiring companies with substantial amounts of revenue. The valuation, the offering, the amount of money that flows off the balance sheet into the pockets of those shareholders in exchange for the rights to those future revenues and the 51% stake that Coty took in Kylie Cosmetics, you pay money off the balance sheet and you hope that that revenue really grows. So basically what the suit alleges is that Coty did not have the adequate procedures and processes in place to accurately verify and properly evaluate the Kylie Cosmetics brand. And so therefore, they overpaid, and it is not Kylie or her team who get shafted. Mm-hmm. It might end up being some of the executives at Coty, but ultimately it is shareholders. Shareholders be warned.
It's just kind of ridiculous. It really is. That's a rundown. Err on the side of caution. That's my takeaway.
One of the best short sellers ever, Jim Chanos, he exposed Enron. He exposed a number of other fraudulent companies. He was early on the Wirecard fiasco. He always says that the fraud cycle follows the economic cycle. Mm-hmm. Basically what that means is as things are emerging from a crash, mm-hmm. there isn't even really that much of an opportunity for fraud because everyone's just got burned, so they have a very discerning eye. And then as irrational exuberance starts to escalate, as you get later and later into a cycle, people's sense of disbelief starts to evaporate, and they'll buy into more questionable narratives and stories. And then only after the market really tanks do the knives come out for those frauds, because people now have the wool pulled back from their eyes and have a more discerning view on their investments. And instead of taking personal responsibility, instead of saying, man, I didn't really read the Alibaba 10K thoroughly, instead of saying, man, we didn't really properly evaluate the Kylie Cosmetics brand thoroughly, we didn't really recognize that there's a difference between Virgin Galactic and Virgin Orbit, it's your fault. No personal responsibility here. No blame for me. Your fault. Your trouble. And if they're frauds, they do need to be, brought to justice. But there are often clues. There are often people warning well in advance that this is occurring. Folks like Jim Chanos, Carson Block, some of these great short sellers. And so what you can expect is that most of these, there will be some frauds that continue to come out, just like Luckin Coffee and Wirecard did before the turn of the economic cycle. But most of them will be washed out the next time there's a severe correction. The folks in the crosshairs will be the people taking all their investment advice from less than 60-second TikToks. And we hope that you are not one of them. We appreciate you watching to the end. If you find this analysis valuable, please make sure that you are subscribing and help us out by sharing this with other folks that maybe are getting really hyper excited about investments. It could sober them up a little bit, and that could be exactly what they need at this point in time.